Hi guys, how we doing?
Hey, Paul.
Hey guys, I'm just want to make sure I don't have any just gonna, can you guys confirm we're still on YouTube?
Yeah, Paul, it looks my screen showing recording and live on YouTube.
Great, that sounds cool. I cannot see us live on YouTube. I'll just check. Oh, it says sharing.
Paul, I've got us live on YouTube.
You've got us live on YouTube. Great, thanks, Julian. Hi everyone, we'll be underway in a couple of minutes with our Sunday analysis show. Been a heck of a market, been a heck of a week, and hearing stories of the fastest sell-off in US dollar. Sorry, of recent history across the US stock markets. We've seen big moves in oil, the pullback in gold. Got to say that one surprised me. Didn't surprise everybody, but it did surprise me. We'll just see who's in the room. Julian, you can definitely see us on YouTube. I can't see us on YouTube.
You're coming through loud and clear, Paul.
Brilliant. Okay. Rightio, if that's the case, guys, first thing we'll do is we will welcome everyone to the room. Hi, Ash and Julian. Nice to have you with us, and to the attendees, welcome for being here. Nice to have you with us, being in the Zoom webinar with us live or on the YouTube channel. It's good to have your company, and thanks for joining us. Been a heck of a week. It's been the kind of week that traders live for, really. One thing that has been this week is opportunity, and as a trader, you have to understand that volatile markets give us real opportunity, and then the truth is that some traders get it and some traders miss. What you'd hope in a market like this is you control your risk, because if you controlled your risk and you got it right, you've done really well, and if you controlled your risk and you didn't quite get it right, you've done no real damage. And these moves have been quick, but they have been in the main tradable, in my view. We're going to wander around the traders in the next hour and get their view on the stuff. We're going to go initially to Ash and then to Julian, and we'll have Ainsley in with us later on in the show. Jeff won't be joining us today. He is visiting some family in Sydney today and can't get online. So first of all, Ash, what are you seeing?
I see a market that, if it pops higher, is going to be a selling opportunity, but I do see a market which is also very well. Actually, it is a bit of a dangerous market to trade, but it's simple to find an approach to that, because you just cut down your risk. Anybody trading should really be only risking probably half of what they would normally, because the thing with it is that if you manage to get in, then it doesn't mean that you have to stop trading at that point. But because if you get in and you get your first trade well enough in profit, then you can control how you can scale into it. Because even though it is less likely, I'm not going to say unlikely, but I will say less likely that we get another move like we did last week, there is still a chance that this market has got a bit of room to go. We had what are we down in the FTSE? Around about 10% in the FTSE, maybe a little bit more, but near enough 10% in the FTSE. Not beyond the realms of possibility that we could get another 3 to 7% drop. It is a range that could be somewhere around there. So if there is an opportunity to get in short, then there's going to be opportunities to add. So I would be going in really light and making sure that that the first trade is nicely protected, and then seeing whether there is an opportunity to add to that. Over the weekend, so we had manufacturing PMI and non-manufacturing out of China, and those numbers are ugly. So previous manufacturing PMI at 50, so right in the mix between contraction and expansion. Forecast at 45.1, actual 35.7. So terrible number from manufacturing. Non-manufacturing, previous at 54.1, so showing that there was some expansion. Forecast of a little bit lower at 51.4. actual 29.6. So those numbers are not suggesting that this market is going higher on Monday morning. So I would suspect that we probably will be gapping down a bit. Whether we gap down, I'll show you my charts. Whether we gap down and hold is going to be the real question. Do you mind stop sharing while I and I'll show you my charts here. Great, thank you, mate. There we have that one there. You see the chart here. So we've basically had a flurry of selling. One day in the 5 was positive and on the FTSE 100. And yes, there's no doubt about it that we do have a level here which has caused this hammer. And I'm going to use the clean chart on this one because the indicators are of use, but only somewhat. And this is what we have. So this is a primary trend line dating back to October 2008, and it just about managed to close on that level. So because the primary trend line is intact, then the idea really from this point is that we may well bottom out of this level. If we're thinking just purely technically, we may well bottom out of this level, and we need to. If the run to the upside is going to hold. And we get back to these kind of levels, even by the end of the year. And I don't want to sound alarmist, but there's every chance that we don't get anywhere near the highs this year, and we just maybe float around. It really does depend on how long this thing goes on for. And in my opinion, it's going to depend on numbers. And as I say, numbers over the weekend are brutal. And I think we're going to need to see those numbers start to not go back into positive, not suggesting that by any stretch, but those numbers need to improve. And because they're so low, then, we've got a pretty good base to go from. So they could jump fairly significantly over the course of the next 3 months to 6 months, and then we start to see a bottoming out. But my personal take on this market is that we've got lower to go. So anything that moves to the upside, I think, is probably going to be a selling opportunity. Does it get back to technical levels? I think that's going to be dependent on the action of the central banks and the action of some of the health organizations. And maybe some data releases, or sorry, not data releases, but news releases on whether we get any kind of cure that could be out there. So there's a possibility that it pops up again, but this is starting to look like a head and shoulders. This is the monthly pattern, and this is the one that we've been looking at, that diamond pattern on. And the diamond is now not looking like an improbability. I think that diamond may well now play out. So there's probably some room to go down, but can it get? But now this is where it's at. So you can see it's just about on that level now. Now, if it drops below this primary trend line, look out down below. But it's possible that we gap down. And when I say gap down, I mean on price. I don't necessarily mean below this bar, but it might be that we gap down on price and then attempt to try and get back up again. But, I suspect most moves to the upside will probably try and find the first port of call for resistance. So that's going to be, if I flip now to a 4-hour chart here, the first port of call on all of these, it's going to be really the lows. That's going to be the first port of call. So we're looking at around about 220 pips to the upside on the FTSE 100. So, around about 3% run up. Is going to probably be the first place that people are going to start looking for selling. If it starts to get through these areas, then I would suspect we might be in a bit of a settle down mode. So we can probably start to look for maybe some leveling out of the volatility, and then we can start to see whether there could be a selling opportunity later. So I'm going to watch the market, not necessarily just for levels, but also how the price actually does act. The price action is going to be really important, and really what I mean by that is how violent and vicious are the swings going to be. Is there going to be any kind of leveling out in between price levels as the market waits and anticipates something that's going to help it out, or will there be continued selling until really somebody does kind of pop their head above the parapet and saying, look, we're here to help. And what I mean by those people, I mean the central banks. We're here to help them, and we're likely to do something in the coming days. But right now, that hasn't happened. And I also, we're chatting previously. I also think in the current climate, I think holding positions over a weekend could be pretty dangerous because of potential news releases. You might get a gap on either direction, and it could be the wrong direction for you. So I think going in light is the key. I think looking for shorts is the key. I think waiting for technical setups is still valid. There was even in this huge move to the downside that we saw, the biggest weekly price drop for time, not the biggest weekly drop, sorry, the fastest weekly drop. Even in that, we still had signals. There's a signal there that would suggest that we could get in short, and there was another one here actually. So there was, even with this kind of fairly parabolic move down, there was still signals. So I still think we can look for technical patterns. I don't think we should be jumping in short just because price gets to a level. I still think wait for a setup and trade it. And I think just go in light. I think go in light, wait for your setups, continue to do what you're doing. I think that's really important. I don't think that we need to drastically change what we're doing, but we are in a slightly different market. So the way to change what you're doing, the way to adapt it, in my opinion, is with the money management rather than the technical setups.
Thanks, Ash. And
Cheers, Ash.
sorry, Paul, I wasn't sure if you were coming back in. Thanks, Ash. I really appreciate it. And actually, sorry, it's Julian here, and I'm echoing a lot of. I was standing here at home, just nodding actually to everything you were saying. So I think it's really important when you're looking at trying to trade through these types of markets is that when the volatility completely switches around from what was essentially historic lows to where we're trading at the moment, where you've got a almost not quite historic highs. We're way away from that. We really see this market get a little bit more violent for that, but we're certainly at very elevated levels in quite a few markets. When volatility has moved like that, that's really a sign for you as a trader to say, probably I'm going to stay trading and I'm going to try and get through this, because you don't know when the opportunities are going to turn up, because there's plenty of them out there, and they're getting more and more valuable, some of the opportunities that I'm seeing, certainly. But really, it's a question of staying in the game. So this is a capital preservation exercise here. There are opportunities and they will come about. And it's one of those times when trading small makes tremendous sense. I'm a big supporter of that. I think what's important here is not to give up, throw your hands up in the air and wait till things settle down, because I think you'll miss out on what essentially are some great chances to make money. And also, the other thing I was going to say, Ash, in terms of picking those places where you could get your trades away, I feel that's about which time frame is the most appropriate time frame to trade. When I was looking at the equity markets over the last few days, I found that hourly and 30-minute charts were working quite well. The daily charts were simply too long to manage positions because the volatility was too great. And and we've seen also a kick up in foreign exchange vol. 2 weeks ago, everybody was lamenting the fact that foreign exchange volatility, especially the term structure of that, was sitting at about 4%, which was about the lowest it's ever been. And
Jules, would you agree? Would you agree also that you're talking about those timeframes that you just got, the hourly and the half hourly, which I completely agree with. Would you agree when you are with trend looking for those short term time frames have been working really well, but when you're looking for them, not going to turn on those ones?
Yeah, so you actually broke up halfway through that, Ash. I think if you're saying that's where the turns are, then absolutely they are, and I think that's the key thing, right? Guys, you have to go do your homework here. This is the challenge. When volatility picks up, normally time frames tend to compress. And that's the key message, I think, that hopefully Ash and I have communicated out to all the new traders out there. It's not scary. What's scary is that something strange is happening, and you feel a bit nervous because this hasn't happened before, and you're looking at it going, oh my God, if you take a step back and look at the weekly chart, these markets have been utterly destroyed. Yeah, they have been. But then as traders, our job is the creation of opportunities. And this is, I can't tell you how important it is that opportunities are just springing up everywhere now, because people are selling everything. And when people start to sell everything, they sell the valuable trades as well as the ones which they probably ought to have sold some time ago. So you then get into the habit, you then get into the mindset of saying, well, where are the opportunities now? What am I looking at? What are my favorite areas that I've been working on now for the last 6 months and I quite fancy owning? If it's a bit of the equity markets, if it's a bit of bond markets, if it's oil or gold, or if it's foreign exchange and we're looking at that dollar yen, or we're looking at dollar CAD, or we're looking at dollar Sing, or whatever they happen to be, right? Whatever those currency pairs happen to be, now is the time when those opportunities are really clear and they're just all over the place. I think that's the key message that I've got out of this last week. And I do get it, for a lot of people who are just starting out, this market is crazy. You know, really, from a high to a tail 12%, 14% collapse. Guys, if you want to see some real wreckage, go and have a look at the Nikkei, and there's charts all over the place. I think the best bad chart is the Nasdaq, where if you look at what's happened over the last 2 weeks, that chart actually doesn't look as bad as some of the other ones like the Dow or the Russell 2000, right? They're looking horrific. So what's really key about this is to go and find one to say, well, maybe if the Nasdaq is so bullish, that would be where I would like to try and position my longs. It's the one that doesn't look the weakest. And maybe
would
where
you
we've
say
got...
as well, Jules?
Can I jump in for
You
a
know,
second,
on
guys?
that. Yeah, go on.
Okay, look, we've got a question in here. I'm not going to read the question now, but it's basically, should I change my entire trading approach right now? And
Oh God, totally
yeah,
not. Sorry, can I take that one, Paul?
You can just start with. I'm going to say the same thing as you a second afterwards.
No, so okay, guys, girls, ladies, anybody who's asking that question, this is the exact moment when you don't change your approach. You stick to your knitting. The trades will turn up. It may feel like you're missing out, but then you're not. What you've got to do is to maintain your discipline in these markets. If you say it looks like, and you take a trade because it looks like, rather than waiting for your own signals, that's when you're going to get yourself into trouble. This is one of these situations where more than ever before, you can't afford to go off reservation.
Yeah, for me, it's like saying there's a hurricane running through, winds are high, it's hailing, the roads are treacherous. Shall I start driving a Ferrari around? No, we probably shouldn't. You know,
what a good idea.
Let's cut our risk. Let's stay with our strategies. Look, as all of us are saying, look, we just had our professional traders call before this, and what we're doing is the same we did last week and the week before. We're looking for opportunities, and I'll talk a bit more. I've got a session at 6 o'clock. You guys are welcome to join that. I'll talk a bit more about different things that I'm looking at. But the first thing you need to do is look. The last thing you need to be doing is trying new things in fast-moving markets, because if you're not experienced, you won't react quick enough to make the right decisions in those. I mean, once emotion takes over, which it will do in those situations, you're in a lot of trouble. So control your risk. If anything, look, if you get it right here, you're going to pick up high multiple winners. So reduce your risk, be selective, understand that if you do that, if you get knocked, if you half your risk, if you get knocked over 2 or 3 times trying to get into the market, it doesn't really matter. If you double your risk and you try and you get knocked over 2 or 3 times trying to get in the market, you really bleed. So pull your risk back, wait for your opportunities, be patient, and don't, be really careful here. We were talking this in the last meeting. This is not the time you trade your opinion. This is the time when you let the market guide you and show you the way. Any more on it, Julian?
Yeah, actually, I want to just take Chris Lee's question that's on the chat as well too.
That's what we're not going to read out.
Yeah, let's just, hey, look, Chris, I think you need to get this mindset out of your head. Who cares if there are big players in the market and what they're doing? Our job is to make money. Ignore them. It doesn't matter. Get into the signals, get into the things that work. Stop worrying about what other people are doing. You got to worry about what you're doing.
It's really unlikely in the next 24 hours you're going to invent a new trading system that's going to work in this market. Just stay calm and look. it's one of the things that that I get is that, and we all get, right, that these are big moves, and they've been, you know, there are people in this room that have probably traded, you know, there'll be people in this room that have traded stocks for the last 3 years and made a truckload of money, that all of a sudden in the last week have found out what that's really like. And right now they're having a new experience and not a very pleasant experience, and huge amounts of those gains have just disappeared like that. And I understand that they're frustrated and all the rest of it, but this is the market, and this kind of move. Professional traders have been saying for years there will be a fast correction in this market. It's gone too far, and now it's about staying calm and making good decisions and finding out how good you are. If you're trading stocks and you've been cut up here, stay calm, make some good decisions, try and move forward.
Hey, look, Paul, guys, and if I can just add to that a little bit as well too. So we've been talking on this show now for the best part of 4 weeks. I think I've been talking about it for 3 or 4 weeks, that I thought stocks were massively overvalued and they were due a significant correction, whatever that happened to be, right? And this time it's apparently the virus. You know, whatever it happens to be, we knew that something big was about to happen and something was coming, right? You know, timing is always impossible with these situations, but you knew the markets are vulnerable. No question about that, right? So we've been warning traders on this talk, on this chat now for quite some time, 3 to 4 weeks, that this was what's unfolded was a risk, and here we are now. And I put on my broadcast group on Saturday morning, Friday evening, New York time. I said, I think it's now time to be a little bit more cautious around stocks. We're going to go into a rotational market. We've had a significant move. This is not the end. Wasn't calling a bottom. I'm just saying the opportunities are now popping up, which are pretty special. Not quite once in a lifetime, but we're heading towards a once in a 3 or 4 year move opportunity set that I think we can't afford to miss. And now's the time to be doing to be really getting on top of where your technicals are and what you're trying to do from which and what markets you're trying to trade, and look for those opportunities, because there are heaps of them coming now.
People in your broadcast group should have had a pretty good time, Julian. It's what, 2 or 3 weeks ago where you called I'm really concerned about stock markets being too high, and on Friday it was equity market update. Having been quite animated about the sell-off a couple of weeks ago, I recommend caution on the sell side from here on in. The price may go lower, but the speed will slow down. Expect a bounce soon. We will look to sell again. Well, we certainly got the bounce, didn't we?
We had a bounce, Paul. I don't think it's the bounce. I think there's more coming.
Fair call. Look, and look, this is one of the things for people who are here. If you think what was it? Is that what I'm looking for? Look, if you think this market is just going to, you know, after losing 14%, that it's just going to go straight down the line for this week, I mean, we're talking about a 25% drop in 2 weeks if that happens, and that might happen, but it won't happen in a straight line. There'll be pullbacks and opportunities. There are guys buying this. There will be guys out there looking to get on the other side of this, and there'll be guys, you know, yeah, there's some automation techniques that are going on here that trade when markets extend, they trade it back to the middle, and they'll be going off all over the place. Please, ours is turned off, to be fair. Okay, so we sort of got a bit caught. Ash, you're finished at the moment. Your cross is finished.
Yes, mate. Yeah. There's not really too much else to look at, but so
you are cut risk, watch your levels, be patient.
Yeah, cut risk, watch your levels, be patient, and in a normal environment, I'd be looking for a long. I'd be looking for a bounce in this market and look to trade it back up again. But my approach this week is going to be if there is a bounce, which I suspect there probably will be, just let it happen. Let it happen and actually just wait for the short opportunity, because the market is still pointing down. You don't get a move like you did last week and all of a sudden people start to buy, you know, consider that as buy the dip and that's it. So there will be some shorting opportunities. But I think in this market, yeah, just sit on your hands until it goes up to a nice level, wait for those technical corrections. And when it happens, you know, and also to address the situation about trading in a different style, you know, it just a daily pivot bounce with a 4-hour bar. Look at that. I mean, that is a traditional setup and that's in an extremely short market. So the proper technical setups and the really good ones will still be out there. But this is the
Daily
benefit.
Bouncers have gone pretty crazy on that, haven't they? Geez, they've been okay 3 or 4 days in a row.
Absolutely right, mate. Absolutely right. And I suppose this is the benefit of knowing a few different strategies and understanding which phase you're in, because if you understand the phase, then you'll know which strategy to pick. This is not a range market strategy that you can employ. You definitely want to be looking at trending trending strategies right now. But it's going to settle down at some point. But when it starts to trend again, get on board, and I would suggest get on board to the downside, but get on board to the downside hyper light, and I mean hyper light.
Look, I'm just go to Julian. We're going to go to Ainsley after that. We don't have Jeff with us today, so we should run through about on time. Reminding you guys that I'm doing a webinar at 6 o'clock tonight, Singapore, where we're talking about a number of things happening in the market, some stuff happening in the company. I'm just going to have a chat for 15, 20 minutes and answer a few questions and see where we go from that. It's the first of our free bonus sessions, Fractions to Wealth, as we look to do some additional content around the coronavirus and the effect it's having on some of the people's lives in our central markets. We also want to give a little back at this time where things are a little bit tougher. Ash, thank you for that. Let's go Julian, then Ainsley. Julian, any more from you?
Yeah, I've got a couple more things I'd like to say, Paul, and thank you, Ash, for your comments, because I think what's really important here in terms of us traders bouncing off each other in this type of market environment is that normally we tend to have contrary opinions. We all tend to part company from time to time about market direction, but the one thing that we've given out as a consistent message over the course of the last 25 minutes, and we were talking about it in the senior trader chat earlier, is that this is a time to manage risk properly and stick to your knitting, because there are opportunities, they will be there, and boy oh boy are they coming. That this is one of those great times when you need to just be really cool about your methods and absolutely diligent when you are putting them on. And there'll be loads that you'll miss because the market is just too violent. And what you've got to do here is to try and figure out that if you are placing stops, and I just see some of Chris's comments earlier, if you are placing stops and you're getting stopped out, that's a sign that you're not putting those stops in the right place, and you're sticking with what was essentially a range trading market type of stop. And now we're in a very fast trending, violent, high volatility market. If you looked at, say you had I don't know, let's look at foreign exchange and say the stop when it was trading at 5% volatility was, say, 30 pips. Okay, if the market goes to 10%, so that volatility doubles, it's not unreasonable to think that your stop is then going to move out close to $1. So you've got to bear that in mind, and that's all you've done is essentially match the risk and the risk of what's happening in the market any one moment in time with your stop loss. And that's why it's really important to understand that varies depending on the market volatility, and you can see that sometimes looking at average true ranges and what's on the screen, and other times it's just really a bit of intuition from the trader. I'm sorry, that's where experience sometimes comes in to say, hey, look, I've got to give this one a bit of a wider berth, because the last thing I want to do is to get pinged for something when it's actually quite a fundamentally good idea, but just I might have got the trade entry point slightly off. Right? That doesn't mean to say you don't have a stop, but you just have to have one that's a lot wider than you currently have. And then in that case, if you're following the risk model that you have, you'd have a considerably less risk on anyway as a result of that. That's the way to handle these types of markets. And that's the way to make a difference between what is a range trading market when you have that low vol and what is a trending market. And that would be true in any trending market. But boy, oh boy, we've had a major change in the last 10 to 15 days where that trending market has come to the fore enormously. Some places in the foreign exchange market, dollar yen springs to mind as being a hell of a ride for a lot of people over the last couple of weeks. Trying to make money out of dollar yen, I think you've had to be very robust and very firm in either one view or the other, and fast to cut positions when they didn't work out. But there's clearly been a substantial move there, and the dust still hasn't quite settled in that currency pair either. And similarly with the euro as well too, that was a down move for quite some considerable period of time, and then it simply bounced without any type of recourse. It bounced day after day after day without a retrace for 5 or 6 days, right? So there's lots going on, things to do. Depending on the time frame of fitting into what's happening, then you can trade that short-term directional bias that you've got. and just stick to your knitting and have lots of tight stops. And one last comment, Paul, I had around this as well too, and I haven't really given much thoughts about what's going on in the market. Maybe I'll talk a little bit about the S&Ps a bit later, but sort of it may affect the foreign exchange market is the reason why I like to mention it. But really, the risk for me here is that such a significant move in the stock markets will not have gone unnoticed by the central banks. Their job is to handle crises. That's what they're actually paid for. They're not paid to muck around with quarter point moves every 6 months in a nice, transparent telegraph fashion. From an institutional point of view, their job is to manage crises. So when things go seriously wrong, that's the job of the central bank to intervene and put a brake on the situation getting out of hand. I'm not saying that 10% or 12% in a week is out of hand, but it's certainly a hell of a lot more of a problem than it was 2 or 3 weeks ago. So I wouldn't be surprised if global supply chains continue to be disrupted and real businesses are looking at significant financial hardship, that I wouldn't be surprised to see a coordinated central bank move over the course of the next few days. I don't know what that's going to look like or how that will work. The heat would be taken by the Fed. They'd probably be the biggest. The others would all join in. But the market's short of US dollars right now and need lots of them. So I wouldn't be surprised to see the Fed do something at
Julian,
all.
is it likely in the end with the Fed and the central banks that really, this is one of the things where these things do become a little bit unpredictable for mine. Central banks don't have a lot of space left. So really they've got two choices. Come in and act decisively with a decent move and try and get in front of this, or they're going to try and keep the gunpowder dry because they haven't got much left.
No, I think that's I don't believe any central banker feels that way, Paul, about the gunpowder argument. I think central bankers have got plenty of room to move. They can write a check whenever they want. They might not necessarily cut rates, but they'll simply provide liquidity to the money markets in sufficient size to make sure that banks are lending to their small and medium-sized customers to make sure they stay in business.
That's the
Okay.
key, isn't it?
At this particular moment in time, given the supply chain disruptions which we're seeing in New Zealand and the financial hardship that is coming down the pipe for some of the small and medium-sized companies who are, they always run on a shoestring anyway. But then if you throw an order book that gets completely wiped by something like this into the mix, they're going to get into trouble. So if the bank then says, okay, I'm going to pull the loans, or you can't borrow anymore, you can't borrow your way through this, and that's a major problem. This is where the central banks step in and say, make sure those loans are made and make sure those customers stay in business. And we'll look at it again in 3 months' time. And my job is to make sure as a central banker that the banks, are doing that job, right? So therefore not create a crisis out of a molehill, right? And that's really what we're trying to prevent here. That's their job. And actually, they're really rather good at it when they get around to it. And I'm sure they're all conscious of it and they're all talking about it. And for those of you that haven't been through significant interest rate changes that have been out of cycle, I have seen them, and it's not unusual for this thing to happen and for action to be taken very quickly when they finally decide to actually get their act together and get into gear, right? But sometimes it takes the Fed, especially so that an organization like that, a bit of time to get itself into gear. But I suspect they're there and they're ready to move right now, given the way that there's that crisis team that Mike Pence is running. I'm sure the Fed is one of those members, and if required, will be able to provide liquidity whenever they need it. So, look, this is one of the things, and that will create the bounce that we need, and that will create the selling opportunity, by the way, for the record in those equity markets. And what does that mean for foreign exchange trading? It means dollar yen's going to probably bounce if that is the case. Look for that to get that move back towards that 110 area, the 109.80 area.
So we have a look
It'll
at some
be violent.
charts for this.
Yeah, thanks, Paul. Yeah, if you can throw up dollar yen, that'll be great.
Ash, do you want to share the charts, or do you want me to share the charts, Ash?
What time is it?
You
Yeah, you share, mate. I'll stop.
Okay. Julian, I was going to ask while I'm getting this set up for you. So it's a big move, and you've been a professional trader. It's close to 30 years, right? Have you seen many weeks like this week?
Oh yeah.
And
yeah, this is a bit like 2000, March 2000. It's a bit like, it's not, thank God, like 2008. The world isn't coming to an end here. Without wanting to be, I am incredibly empathetic and sympathetic to the people who have been affected by this. Do not get me wrong. And there's a lot of vulnerable people who are still going to who are still going to be affected by this virus. But the death rate is still sustainable within the normal course of events for the world, right? And does it deserve a 12% sell-off? Well, maybe it does, maybe it doesn't, but it just is. right? When global supply chains are disrupted, I'm not surprised, but everybody was worried about Apple's earnings because they weren't able to open their factories in China. Well, funny enough, everything's back open again and back functioning again, yet the market keeps selling off. So, you know, sometimes there's things happening which are a bit weird, and you just have to roll with it and just say, well, there's price action and I'll trade it. But no, I've seen this 4 or 5 times in my time, and you know, the one thing that does bring this back to me, if you really want it, actually was the crisis in '98, which a lot of people keep forgetting about, which was the Asian crisis when the Fed cut interest rates. I think in a day, they cut them 50 basis points in a day. And they just said, "Oh, that's it. This is ridiculous. We you know, we're a bit worried about the way the markets are trading. Right, 50 basis points just like that." And everyone went, wow, where did that come from? And they just said, well, that's it. We're providing liquidity. We're doing what we need to do. It's a crisis. Let's get on with it. And there have been loads of examples where similar things happen. So their job is to act as a brake. They won't stop the overall trend, but they'll act as a brake and get the process down to a manageable thing. And that's what they're trying to do. And that's what they will end up doing. But, you know, in the end of the day, they might not cut. Who knows? Right? It might stabilize itself. But if it continues to go down next week and we see another 5 to 10% drop, then I think that Fed rate cut possibility comes right onto the agenda and is probably front and center for a Thursday cut or something like that if the market continues significantly lower.
One thing about it, Donald likes to put a lot of pressure on the Fed at the moment, and he does not like this market. He's half his re-election stuff is based around the fact that he's the answer to the US economy. He's not enjoying this very much, I wouldn't have thought.
This does not help Donald Trump's re-election chances. So therefore, one could conclude quite possibly that the market needs to recover. We've got another 6 months to go, so there's plenty of time left yet. But there's wherever the dip will be, when it starts to bounce and starts to recover, it'll be quite interesting, and we'll see what happens. But we're not this down move. I don't think is over. We've got another 2 or 3 weeks of this at a minimum, possibly through to early April, but probably for the next couple of weeks. But that doesn't mean to say it's not going to be volatile in the process, right? And so to my point, if you got dollar yen up there, Paul, I think it's easily possible that we're going back to that point where we broke out from, which is about 109.80. If there was something dramatic to happen, 109.8 is the target point for you to have a think about maybe putting another short position on. Because the market has rallied, you know, this was a hairy final breakout move in dollar yen to the upside, which then got reversed within 4 or 5 days in an equally scary and hairy fashion as well too. When you can clearly see the market got long of dollar yen above 110 and then had to cut their positions around 109.80, 109.60. By the time they finally cut them, we were moved all the way down to below 108, 107.5. That's crazy, right? So that type of movement, that type of price action, if you're on top of it, is a great opportunity. You know, that point there, everybody worked out they were wrong.
Yep.
Right, and then you see the move that unfolded on Friday in some kind of spectacular fashion, right? So that's people liquidating positions there, right? So these opportunities are around. There's other opportunities coming up and things happening in the market. There's going to be heaps of them over the next few days, Paul. So I'm really excited. I think this is a great opportunity for people who are just starting out to learn how to trade through crises and learn how that their methodology really does work in any market environment. It's market agnostic as well too. So what better way to find out? It's much easier to get it to find out when volatility is up at 20% than when it's at 3%.
Yeah, look, it's one of the things, isn't it, that, you know, it's a bit weird in the market, isn't it? Because, you know, this goes on and there's fear all over the place, but, you know, we've been calling for some volatility for a little while now. You know, you need some volatility, and we talked about this last week. When we say larger volatility, that largely means longer daily bars. We need more to happen in a day, and the daily range has been falling on a lot of currency pairs. It's probably down around half what it was 5 or 6 years ago in some pairs, and we've got our volatility, and these are great opportunities to make money. And look, if the worst thing that happens to you in this particular event is you get a chance to practice your stuff and do it at low risk, and, you know, you lose a couple of %, but you work out how to time it right next time, then next time you'll make some great money. Because as Ash said, there have been good signals on the way down. If you've taken the good signals, you've gone really well. Daily pivot bounces short on the FTSE. Not a bad trade, you know. That's a pretty early taught intraday trade. Anything else you want to do? Have a look at the SPX, Julian? Anything you want to have a look at, Julian?
He was there.
He was there. It seems to have gone. It seems to have gone quite enough. We've lost internet with Julian. The fact I can hear you, Ainsley, suggests we haven't lost internet with me, which I like as
It
an
would
option.
be helpful if I actually unmuted myself.
Oh, that helps. It's the on-off
Sorry,
switch.
guys.
The on-off
Sorry.
switch.
Rookie mistake.
Oh,
Yeah, look, I don't need to see a chart of the S&P to know what to do about it. The key levels in the S&P are 3,300 and 3,330. So from a trading point of view, I think they're really, really interesting. And farther up, maybe we might see the market back to that 3,100 level, possibly on a significant bounce. I don't know. This is all. And look, Chris. Chris has asked again, if the Fed cuts rates, the market going to go up and down? Chris, again, what we're doing here is we're saying if the Fed cuts rates, pretty clearly the market's going to bounce, because that's the Fed stepping in and providing liquidity that the market didn't otherwise have. And it's the market, the Fed trying to calm the markets. Will it work? Well, that's the great question. So it's not unreasonable to think that you could probably guess that it may work, but we don't know. Only time's going to tell on that one. And Paul, by the way, in terms of measuring it, you just take the range of Friday and swing it up, and then you'll get there. Thank you. And by the way, that's a 200-day moving average. Then probably you're getting to that sort of level that you're looking for, somewhere in that area. What's that? 3,100. I think that's probably the top of any type of aggressive bounce I'd be looking for right now. I'm not sure we're going to get that high, but we'll see.
It's one of those things, isn't it, Julian? Where if you just want a simple look at this. You're probably short biased under the 200, and if it gets above the 200 and closes there on a 4-hour daily chart, maybe you're going to review it.
Yeah, and look, could you put up the 30-minute chart for me, Paul, of that?
holy moly.
Right, guys. So for those of you that have seen my teaching about the sentiment cycle, this is like a textbook one. Okay, you had the high low that got put in place very late in the session on Friday afternoon, and from that, it's bounced really aggressively. The reason why I was thinking, and I do have a small long position in the S&P, it might not work out on Monday, who knows, but the point is that that's a classic position in the type of trading that I do, and that higher low, and it exploded away from that point once it put that high low in place. So what's really important about this is to actually look at those type of market patterns. What you're trying to do is normally we'd look at those in dailies and possibly sometimes even weeklies on the sentiment cycle. This time we were using a 30-minute bar chart, but the same pattern repeats itself. It's just a different time frame because volatility is a little higher. So that was really what I wanted to point out with that, Paul. And you can see where that targets as well too. That targets up to that 30.67 mark in that area. So we're not a million miles away from where I'd be out anyway on a short-term bounce. I'm just looking for a spec trade on this one. Exactly double that range up. That's pretty fair about where that comes from. So that range down to there, you swing that up, and then that gives you somewhere up around that 30.60 mark, something like that. There we go. Those are the key levels, and just trade it as you see it. Who knows what's going to happen on Monday? We may gap up there. We may not get there at all. I don't know. We might go straight back down again. So we'll see what happens Monday.
But if anybody's looking for a pattern on that chart in that setup, you've got an inverted head and shoulders. There you go, Ash.
Yes, it is an inverted head and shoulders.
Head
for
and
Ash,
shoulders, and away it goes. So it should, on a technical basis, yeah, it probably should. But yeah, at the moment, trade what you see, not what you think.
There we go. So Ash will be happy because there's a head and shoulder formation.
He loves
Um,
it. He'll be super excited.
He would be,
and I'm happy
the
because there's a
neckline's-
higher low.
Yeah, which is all that head and shoulders is, isn't it? So look, here comes a higher low. Here we go.
So if you go back up that chart, Paul, there hasn't been many instances where that higher low has been in place the whole way down. That's the first higher low we've had on the entire move.
Yep.
That's the reason why.
And more importantly, on that technical setup on the head and shoulders, the neckline has been broken.
We'll see what happens. This could be interesting. I'm getting more comfortable with my position right now, but no doubt on Monday I'll be told I was wrong.
Story of your life, isn't it?
Yeah, exactly. On that subject, Ainsley.
Yeah.
Okay, Ainsley, what are you looking?
Oh, let's throw up the gold chart, and we can address one of Chris's concerns about gold being manipulated in the market. Chris, gold was not manipulated in the market. What
Who
happened?
buy?
Chris had made a comment. He said, obviously, the gold market was being manipulated by some of the big players. What happened was, as the equities market came unstuck, people had to cover and sell whatever they had to cover positions. So that's why you saw gold being sold. I know we have been saying gold is a safe haven and people would be going to gold, which is one of the reasonings I was still holding my long position on Monday, which I got out of just a bit too early, but hey, I still made it was a good Monday morning. And we saw it gap up and take off. And then it came back, and it's if you go down to a 4-hourly chart, you'll see that a little bit more clearly, how it's chopped around for most of the week. And then as things, the news of supply chains and the economy and how that was really actually starting to impact. So we now saw Italy being in an issue with coronavirus, and it was spreading quickly through Italy, and it was starting to really bite. We then started to see all these other economies really starting to be affected by something that they thought was just a China, Asian-based issue. So what we saw here on Friday was, while the S&P and the Dow Jones and everything else was just dropping straight down, we saw gold dropping, which probably for a lot of the newer traders probably didn't make any sense, because when the other's going up, the other should be going down. That is no longer applicable when people are trying to sell whatever they need to sell to cover positions and, yeah, do what they need to do. So that is one of the reasons gold really took a hit on Friday. So technically, if we go down to a 4-hourly chart, please, Paul.
Sorry, Ashley.
That's right. You get there soon.
Interesting. Be interesting to see, won't it? If
there we go.
So it's a nice move on a
So right through Tuesday and Wednesday, which gave me just headaches. Tuesday, Wednesday, oh God, where'd you go? Tuesday, Wednesday, Thursday, backwards and forwards, backwards and forwards, backwards and forwards, backwards and forwards. It just was a nightmare. And then the technicals started to kick in, and then it dropped off. And on Friday, we had that consolidation box that we saw all week was broken, and away it fell. So yeah, on my I got it on the way up on Monday, and I got it on the way back down on Friday. So this is where we're saying, look at the opportunities and trade the opportunities, not it's going to keep going up, it's going to keep going up because the S&P is dropping, therefore it should be going up. The chart's not saying that to you anymore. The chart is saying it's going down. We don't have any higher highs in place. We don't have any higher, higher lows. It is consolidating. It's going sideways. It's going to make a decision one way or the other. It broke, and it broke to the short side. So that is a really important thing to be looking at.
Yeah,
So
look, it's important candle, isn't it? If you're looking at candles,
yeah,
decisive break of a level. If you're going to see a level go and close on the bottom of the candle, it really is a strong sign for you. And we've taken out weekly pivot, we've gone straight through monthly through 200 moving average, a little bit of a bounce on monthly pivot. It'd be interesting to see how that plays out. I'll be talking about monthly pivot quite a bit tonight, actually. It'd be interesting to see how that plays out.
Yeah.
And just how much is in play given the market we do have. So Angie, where to from here?
I'm very cautious with it. I just want to see, I think there'll be a bounce further up, but look, I think it's going to keep going. I think its positions unwind. People will be selling off more of their assets, and gold's going to be one of them.
Yeah, let me see if I can just put this in again to answer one of Chris's question. When we talk about covering positions, we are meaning closing them. And I think one of the things that's potentially happening at the moment is if gold's your safe haven, where you've tucked away some cash, if your stock position's lost 30 grand, you might need to get 30 grand back to cover that, and you might have to sell your gold. So people who wouldn't normally sell gold might have had some cash flow issues around some losses in some other areas. I'm not talking about, this isn't you and me. I'm talking about some of the bigger institutions taking some pretty big losses. And they may well have decided, even if they even if they didn't need the cash, they may have decided, you know, let's say in a bigger institution, they lose, let's call it $2 million on the crash. They might decide just to liquidate $2 million worth of gold just to square their books up. But they're probably quite keen to have their books reasonably balanced in this market. So some selling of gold could well be a reaction to them losing money in other areas.
Yeah. So yeah, just to reiterate what Ash and Julian have said, especially when the market's moving this quickly, is yeah, I closed out my positions early Saturday morning. Actually, I put a target in, and I wish I'd been a little bit bit more game to go a bit lower, but I did. I still made a good profit on it, but don't hold positions over weekends at the moment, guys. It's just you're asking for trouble. The market's just moving too quickly and gapping too far, and I've got to say, even I, who normally only I don't normally look below a 4-hourly chart, I was looking at hourly charts, trying to get my position in on Friday evening on gold. So yeah, I was dropping down to hourly charts as well. It's looking for the opportunities that are there, as Julian said. I mean, for anybody who hasn't been listening or had their fingers in the area, but Julian's been saying for weeks, this market, the equities market, just cannot keep going the way it is. He's looking for a correction. And, you know, apart from not having it in writing, although I think the broadcast group got it in writing, that's what we've been saying. And we talked about it. Yeah, definitely Monday will gap up, the coronavirus and how it went up, but then you've got to adapt to how the market changes through the week. Things that we say on a Sunday night are not necessarily going to hold for the entire week.
Well, not a week like that, for sure.
Yeah, you can't. So yeah, the other one that I traded during the week that was a bit hard to do was my oil, because I know we were very keen for oil to keep going for seasonal bias, but as we said last Sunday night, I just think the fundamentals are really just going to kick too hard and are really going to bite. We talked about it gapping down on Monday, which it did, and then away it went. There was an airstrike in there as well, which, like I said, I mean, I was shorting oil at that stage, and nothing like a Russian backed Turkish hit on Syria to make the market move a little bit faster. And yeah, that was nice. I think it was Wednesday, and that was after. I'll tell you when that was after, which was that was hysterical. Was crude oil inventories came out, and I think the market tried to rally on that news, but that was just having no hope on that one at all. And then, I mean, look at it, it's just gone, like I said, on a 4-hourly chart, it just looks like a slinky going down the stairs. It just goes ka-dunk, 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 very neatly and very controlled, but boy, oil's really dropped away. Now it's bounced off the bottom there, and one of the things that worries me is that when we start getting down into that below 42 mark, everybody from Kazakhstan through to Saudi Arabia really start to bleed. The whole economy start to bleed. So whether we're going to start seeing a little bit more manipulation. We also had that issue, very interesting issue last week when Russia, or the week before last, Russia contacted Saudi and said, this is just ridiculous. We've got a great big gaping hole. And Saudi said, okay, guys, we're going to have to cut barrels. And all of a sudden, Russia wouldn't turn up to the meetings because they didn't want to cut the 600,000 barrels. They initially agreed to 400,000, and then 2 days later, they reneged on that as well. So that's when we saw the market start to drop away after the initial enthusiasm. But they haven't got together to try and work out what's going on. But we're now in danger territory, where danger territory to me means there could be a little bit of propping up of the market, price-wise.
Yeah, well,
So
we're going to see a reduction in
they're going to cut it. They don't have a choice. Like I said, get below 42 and all those economies just start to bleed. And
48 is the median price, isn't it? So 48 is the cost of oil across the globe.
Yes.
So underneath that, there's plenty of people who don't want to sell oil at $45 because, why would you sell it at a loss when you can just cut your production and sell it at a profit? I think, Oil will be interesting. Oil was an interesting market. Well, I'm not going to talk a bit about oil this evening, actually.
It's very fun. It's very sensitive to the news, and that's one of the things with oil. You've got to be across, and it's one of the reasons I subscribe to a couple of news lines. You've got to be across what's happening with who's saying what and what they're going to do and what they're not going to do, because it's that sensitive, and it's really ultra sensitive at the moment, Paul, because they're getting into really ugly territory.
Yeah, look, yeah, there's not many oil producers in the world that, there's not many oil producers in the world that are very keen to see oil at this price. And while that might bring the price of petrol down to the pumps for many people, which is stimulatory, which is a good thing for the world, or cheaper petrol in tough times is a good thing. In reality, I don't think we'll actually see it transfer into way cheaper petrol at the pumps. Certainly not where I live, that's for sure. Anything else, Ainsley?
Yeah, well, one of the theories I and I'm bouncing around at the moment is, and Apple's gone back into production, which is a good sign. But I think once the coronavirus does settle down a little bit more, and what I mean by settling down is there's a vaccine, there is a cure, there is a treatment, and that's in the pipelines. Once that happens, I believe we will see the Chinese government stimulate the economy at the moment. They've got about 1 million businesses that are screaming they're on their knees, and so are some of the Chinese banks, actually. So they will stimulate the economy. Once they stimulate the economy, you will see, obviously, the price of oil go up because their manufacturing sector will go back into production, and they'll increase in demand, and all the risk on currencies like Australian dollar. I mean, the Australian dollar, it's not really a dollar anymore, is it? It's pence.
Love the Australian dollar. Leave it alone. I'm still short. I'm looking for some more progress on that trade. Look at that. Love it. Love the Australian dollar.
Oh my God. But as you can see, it bounced on Friday. But as soon as we see that, as soon as we see things starting to settle down and, hey, bingo, Apple starting to move back into manufacturing, we're going to start seeing there'll be the impetus for a few other bigger businesses to go straight back into manufacturing as well. China will stimulate that economy. They can't do it right at the moment. They will. I mean, obviously, they've got the pockets to do it. They'll stimulate the economy. They'll get everything going back again, and we'll see oil go back. All the risk on currencies will go up as well. But I just can't see it happening at the moment. So moving, yes, it is. Being vigilant, absolutely. Stick to your knitting. If you need to go down to another time frame, as anybody who works with me know, I don't really like those shorter time frames. I look for a bigger picture. I'm looking for a bigger move. But boy, guys, yeah, gonna have to do what you need to do in the market moving so quickly. So yeah, Aussie dollar. I know Jeff was going, and kudos to Jeff. He just said last Sunday that Aussie dollar, there is nothing in place for it to actually change direction. He said, I just think it's still going to keep going down, and he was right on the money.
Yeah, he wasn't bad, was he?
No, he was right on.
Probably tested the bottom of his channel and bounced too, to be fair to the man. And on that note, guys, we are going to next week for the market analysis show on Sunday night. Ainsley and myself will be in Malaysia, so we won't be able to be in the show. So we are going to give you guys the chance. If you email Contact Actions to Wealth with a heading of please ask someone to be in the show, whichever Actions to Wealth presenters you guys ask for, we will ask them to cover the show next week when Ainsley and myself are away. I expect next week that Julian, Ash, and Jeff will all be in. So we'll bring a couple of extra presenters in. We did use Orlando last time. He came in from El Salvador. We could get him back. We could get see if Lloyd will do it. Or no, Lloyd perhaps can't do it. He is away on a trip.
He's diving. Yeah, he's away.
But ask us, email Contact Actions to Wealth. Let us know who you'd like to have in the show, and we will see if they can cover for us next Sunday when we're away. This Sunday after I am just back, so we'll be in for that after that. Anything else before we wind it up, Ainsley?
No, just be careful out there, guys, especially for the newer traders. Just be really, really careful. There
Yeah,
are
if,
opportunities, but yeah, just watch it.
if you were watching your favourite sports team in a major final and they started playing in a completely different way, when they lost, you'd be pretty scathing of them. And this is our final. These conditions are the conditions where we need to do what we do, and we need to practice it and become better at it. And learning how to trade this kind of market is a huge part of trading. It's good fun. Look,
Yeah.
in your life, you will trade maybe one of these every 3 to 4 years, and if you manage to become good at it, you can make a lot of money. And I really encourage you guys just to take that approach of, of learn, pull your risk back, as we've all said, trade what you trade, see what you can learn. You've heard a lot of guys talking about chopping into different time frames, looking for entries. Depends on your strategy, how that works. But there's been legitimate entries on just about every time frame if you're patient and
true.
wait for them. It's very easy to get chopped up if you rush into this stuff. You've still got to be patient and find the right stuff. And it's hard to do in fast moving markets, to be patient and to just understand. Sometimes it goes the other way. Sometimes you're wrong, and you just got to, let it go and wait. Sometimes it goes the way you want it to go and you miss it. And that's also trading. What you're going to do is wait for what you believe is your way in. We will talk about this in not a lot more.
Yeah.
Just checking on the questions before we go.
Yeah. The only other thing I was going to say there, Paul, was just the charts. Look at the charts for the technical setups as well, because they're there. And to think that the market should be going one way because for whatever reason you think it should be going higher and it's going lower. The charts are the price action, is the actual price action, and price action is king. So do that. Do your research, obviously, as well. But I mean, yeah, what you need to look at is definitely in the charts there.
Look, I've had a question about Actions to Wealth recordings. I'll cover that at 6 o'clock. It's not really a YouTube channel. This is a market analysis show. But if you're in for the show around 6 o'clock, we'll talk a bit about what's happening with recordings and those kind of things, and all things Actions to Wealth. For those of you that have joined us today, we finished, Ainsley?
Yep. Happy trading, guys.
I blame Jeff, because we've had no Jeff and we finished on in an hour. We're on time.
Must be Jeff.
Must be Jeff. I have a feeling it's not really Jeff. Guys, thanks for joining us today. Take it to heart, spend some time, think about the stuff that's been talked about in the show today. Take some care in the next week and trade responsibly, because that's what professional traders are doing. I want to thank Ainsley, Ash, Julian for joining me in the show. It's always great to bring their opinions to the market. It is live and free on YouTube. If you've got friends who are into trading and might want to learn a bit more, tell them they're welcome to join in. For those in the Zoom, they have a chance to answer some questions, and we will try and answer questions on market analysis. It's a bit hard on some of the other stuff in this show. There's other places for other types of questions. Really appreciate your support. Hope you've had a good trading week, and hope you have a great trading week ahead. Stay patient. Thanks to everyone for joining us, and we'll talk to you next week. I won't talk to you about the team. We'll talk to you at the same time next week. Cheers, guys.
Thanks, guys. Bye.